Family, welcome to another episode of Financial Freedom. God, I love that intro. Anyway, we have a wonderful, exceptional program for you today. We have four different guests, and they have over 70 years of experience in housing. They're going to be answering some great questions for us. Y'all, I can't wait to get into this. As normal, I am your host, Derek Brown. I am your accompaniment on this journey, and trust me, today we're going to be learning a lot together. Just a whole lot together. Let me introduce to you some of our guests. Oh man, we have Rakia Holmes. She is a realtor and serial entrepreneur. She's the CEO of Precision Tax and Financial Services. Over 18 years of real estate experience helping people build wealth. She's been an investor, a renovator of large portfolio homes. She's owned franchises, and she's not done yet. You got Yolanda Munford, who's the Assistant Vice President and Mortgage Operations Manager of Citizens Trust Bank, an advocate for home development. She's been a mortgage closer, a loan administrator, a residential mortgage coordinator, 19 years of experience in loan origination, processing, and underwriting. Her resume is insane. Then we got Sharon J. Kelly, the senior mortgage loan officer for Citizens Trust Bank. Shout out to Citizens Trust Bank on their 100-year celebration, y'all. They've been doing this thing for a while, so special shout out to them. She originates mortgage loans, participates in community and economic outreach programs, 21 years of banking experience in operations, consumer lending, mortgage origination. Vice President of Community Development, 10 years of federal and local government community economic development programs. Whew. I got one more. Hang in there. Christopher Stewart, the founder and owner of Stone Oak Mortgage, himself over 20 years of experience. His business is also committed to community and volunteer work and providing financial assistance to nonprofit organizations. Whew! Let me tell you something. This entire panel is insane right now. So let me say thank you in advance for for tuning in, because you about to get some gems today. There's some wisdom on this panel. You know, this whole thing started March 19th, 2020, and we went from one show to over 35 shows with a few views to over 45 million views around the world. So let me just say thank you for that, and thank you for tuning in. Like, share, subscribe. Remember, you can find us on the handle at The Hope TV. One word, all caps, at The Hope TV. Ladies and gentlemen, let's get into it.
Good morning.
Hello,
Good
thank you
morning,
for
y'all.
having
Thank
us.
you.
Morning.
Yes, definitely,
Pleasure.
definitely. Thank you so much for being here. I know that time is valuable, and you all have taken your time to come and speak with me today. Special shout out to Pastor Mel Smith at the House of Hope Atlanta for helping assemble this panel, and that was so awesome of him. He also does work with the Social Justice Ministry, so I want to say thank you to him as well.
Yes.
Yo, this is wow. Yeah, this is wow. Okay, so let's dig right in. There's a lot going on right now. There's a lot of things happening in the news, in the media, and I'm curious about how these things may affect home buying. I know that in many ways, some people tend to panic, do things in a panic, and I would think that real estate and home buying and owning a home sometimes may be no different. We just had the trial of Derek Chauvin. We had another young lady shot and killed in Ohio. Let me ask you, is there a particular way that fear influences home buying? That's for anybody.
I would
Um, I,
say
I'll start.
definitely.
Okay.
Okay, go ahead, Chris.
We're gonna go
Nope, Sharon, go ahead. Nope, go ahead, Sharon.
Thanks, Chris. I would definitely say fear influences home buying just as much as, believe it or not, COVID has a strong influence. But fear, because people are already somewhat intimidated about the process that they're going to have to go through. How's it going to work? So yes, and the fear of other things surrounding or impacting that makes it even more tremendous for an individual that's about to embark on this journey. Absolutely.
Got you.
Definitely.
Mr.
And
Stewart?
just to add a simple, the fear of losing out, as interest rates have dropped. A lot of times homeowners might think I might lose out, so I need to get a home right now as rates are lower. And also the fear of maybe homes not being there. So right now it's definitely a seller's market. So there are buyers who are willing to pay even above and beyond the current value of a home just because the thought of I might not be able to get this home down the road. So it definitely plays a role from different standpoints.
Got you. Let me ask you this, because you brought up a couple of good terms. You mentioned the idea of a seller's market. You mentioned the idea of real estate being finite, pretty much. What creates a seller's market, and what is it that we should be aware of as we're looking at potentially buying a home?
Rakia?
Well, it's definitely a seller's market. And, basically it's more demand than there is supply. Home prices are up about 15.8% nationwide. We have an
Wow.
extreme shortage. Days on market are literally hours versus days. So
Wow.
it's a great time as a seller to be able to sell your home because buyers are doing unprecedented things. For my
Mm,
buyers to secure a lot of these homes with the multiple offers that are being there, we have to be very creative, very strategic. That is the reason why you want to have a professional realtor that knows what they're doing, that has negotiating skills, that will be able to present the best offer to the seller so that you will have, an advantage to be able to win out on a bid.
Let me ask you all this, because I feel like this is being brought up in other words.
Mhm.
Are we in a housing bubble again? We went through that earlier. I believe it was 2008. It burst. Everybody's home values may have dropped, or it may have been impacted. Are we in another one? Will this one burst? Will prices drop? If people think, well, man, they're selling houses for exorbitant rates, so on and so forth. If I just wait, I'll get something cheaper. Is that a mindset that you're encountering? And if you are, is it smart? Where are we at? Would you say we're in a housing bubble?
Anyone?
Not quite a bubble. And I don't know if everyone else would agree with that. I don't quite think we're in a bubble because we have several factors right now that are beneficial on both sides, the
Okay.
seller side and the buyer side. Interest rates are great right now for buyers. The fact that there's not a lot of inventory is working well for sellers because they're able to sell their properties at a higher price. So people aren't risking losing equity in that respect like we did before when we had the crisis. The value was dropping. Right now, values are trying to trend upward. So
Mhm.
that's why I say it's an advantage to buyers and sellers right now.
Mhm.
Got you. Got you. Is previously, like you said, it was trending a certain kind of way. I don't know, as a person who has thought about buying a house myself, I don't know all the factors that go into buying a home, and I definitely don't know even all the factors that caused our last housing bubble collapse. I've heard things about predatory lending. I've heard things about redlining. I've heard things about false appraisals. What are some things that I should look out for, and or when should that red flag go off in my head to say I need to call a professional because this might be over my head?
I think for
Yolanda?
one of the first, thank you. For one of the primary things you probably want to do is even before you start looking, you want to reach out to a professional immediately. I think that is the first, probably smartest idea to get you going. Primarily because you want to get an opportunity to look at a couple of things for you personally, such as seeing where you are, credit, income wise. And then from
Right.
there, getting yourself completely pre approved or pre qualified. So when you get with your realtors, you already know where you are from a what you can afford standpoint and you know what area you really need to be looking in. The best steps to start and to make you, more strategic in your moves is specifically to kind of know where you are. So you need to do a checkup on yourself before you get started.
Tell me what this checkup looks like.
So for us, and anybody can chime in. I think what we try to do with every consumer is we want you to take a look at where you are from a credit profile first and foremost. See how you've been
Okay.
budgeting. See how you've been paying your obligations. If you've been paying them on time. If there's excessive obligations that need to be taken care of, you want to do a complete credit review of yourself first and foremost. That's the
Okay.
biggest piece you want to take care of first. Second thing, of course, with credit, you'll know where your credit score stands, so you know what kind of power or situation you may be able to put yourself in when you get with your mortgage lender and ultimately end up with your realtor. And then just
Right.
making sure from an income standpoint that you have income and savings to the point to where you need to be. As Rakia mentioned earlier, with this being a seller's market and you have to negotiate and be strategic in your submission of contracts, sometimes that means that the seller will not give you anything towards closing costs. So, with that being the situation, you got to make sure you have savings as well to cover all the expenses, not just your down payment, but also the majority of your closing costs in order to win that bid. So, you want to start
Absolutely.
from the very beginning, looking at your credit, income, and assets to get you going before you get with the realtor.
We are talking about pioneer women and women who are blazing the path for all of us.
I started this campaign with a prayer and a plan, and I just worked that plan. God saw fit to predestine me for this position. I'm honored that the community, they listened to what I had to say, and I'm excited. I'm excited to be a pioneer.
I work in the #1 cable news network in the #1 market in the nation, and I'm the only full-time African American woman in my newsroom. Being inspired is really saying that at the end of the day, no matter what's happening in my world or around me, it's bigger than me.
No, go ahead.
I was going to say it's also good to, of course, get with the professionals up front, the mortgage lenders, of course, and then once you're pre-approved, pre-qualified, then the realtors can take the baton and be able to find you exactly what it is that you're looking for in your budget. But then also the lenders can speak to the fact that if there are programs, available that you may qualify with your income and with your credit, if you don't necessarily have all of your down payment funds available, there may be programs out there to be able to assist you in that arena.
I think that's an excellent point that you
Oh,
made
wow.
because making sure that the buyer is dealing with a lender that can tell them about the various programs, because that's where it all starts with who you're working with. If you're working with a lender that can provide down payment assistance to assist you with your out-of-pocket costs, that's very important. And normally lenders have that kind of information, and they need to know to find a lender that's participating in a program that's applicable to their needs, whether that program will work for Atlanta or DeKalb County or statewide, or if it's a program that I have to be in a specific area. So there are a lot of pieces that have to fall into place on the front end with that buyer. So working with the professional is critical. And some of them even down to the level of beginning with a housing counseling agency that's designed to give them the full perspective of where they are and what they look like, which is much different than what a lender is going to do, because we take a very deep dive into what they look like as far as credit, as far as income. But the housing counseling agencies can give them that basic foundation of information that's so important. I still do a lot of homebuyer education classes, and I've always been a strong proponent of education, homebuyer education. It is so critical, and it's even more critical now because there's so many changes in the industry right now. Technology has changed totally. Processing has changed
Right.
totally. The requirements and those things are constantly changing. So from year to year, we see things that impact buyers in a different way, impact sellers in a different way. So people need to try to find a way to stay abreast of the changes. And doing things like searching websites, going to workshops, just finding some sources of good information that you can call and say, hey, what's going on with the interest rates? What's not only interest rates, but what's going on with closing costs? That you can bounce these questions off and get some really important and some answers that are going to assist them in the process. Process is key. Knowing the process, understanding the process, and importantly, knowing who the players are and the roles and responsibilities of the different players in that process.
Absolutely.
So
I totally agree, Sharon.
Yes.
that's a lot going on. Okay, so how do I know when I'm being led astray? Because if all this stuff is changing, all this stuff is in flux, you have people on social media trying to give me a class for how to come over here and flip houses. These people over here who are advertising to come over here and repair your credit. These people over here who are talking about giving you a loan. These people over here who are talking about, they can heal your left sixth pinky toe. When do I know when I'm being scammed and when I'm with a professional? Because I'm in a privileged seat, right? Because I'm sitting with over 70 years combined with all of you of experience. I'm sitting with that right now. But if I wasn't hosting this show, I don't know if I would have ever met you. So where do I go? Where do I start looking for these professionals?
To just kind of piggyback on what everyone else is stating, Derek, one of the most important things, and this is not just our industry, but in general, that you want to see from the professional you're working with is not what they're telling you to do, but the questions they're asking of you. What are the important things to you and your family, right? To make sure that they're not just trying to give you something, but trying to meet what your needs, desires, and goals are. So it's not necessarily the information that they'll give to you that's important, because the information remains consistent. The difference are the questions they ask of you to find out what are the things that are important to you. And that's always going to be very important in dealing with any professionals, right? Because as just mentioned, the guidelines will be pretty much the same. Not always, but they're going to be the same. But what will be different is what your needs, goals, desires, and wants are. So if they're not asking you those questions, trying to educate you, to empower you to make the best decision, then that's going to be a telling tale that this individual is not trying to help you to accomplish your goal. They're just trying to accomplish whatever their objectives are.
True.
Okay,
True.
so it should be a very intentional, personal conversation about what you and your family are trying to accomplish. If they're more
100%.
busy trying to sell you a service, then I may want to reassess if I want to deal with this person.
Exactly, because again, you're trying to accomplish your particular goal, right? Whether it's where you're trying to go, when you're trying to go, what your needs are financially. Do you need down payment assistance? Can you qualify for down payment assistance? If they're not asking you these questions, right, then there's no way for someone to truly assess what your needs are without asking you, right?
Right.
So it's always going to be about the questions, just like you're asking us questions right now. The only way to find out the answers is by the questions that are being asked of you.
That is
Your
a
due
very
diligence.
good.
Everyone needs to do their due diligence, ask the right questions, and so forth, as Chris mentioned. That makes a world of difference.
Okay, so if I go back to, and I'm just taking it all in, if I listen to what Miss Yolanda said and what Miss Sharon says, then I'm looking to assess, get a hold of a professional, assess where I'm at, look at where I'm getting started, making sure that when I go through this process, I don't just have a down payment, but extra savings for this house and whatever comes up. But if that professional is not asking me the appropriate questions, looking at what I'm doing, looking at where I'm going and what I'm trying to do, like Mr. Chris and Mr. Kia said, then that professional may not be for me. So I should be shopping around for the appropriate professionals, just like I would for a good barber.
That's always going to be the case.
Right. You definitely want to
Absolutely.
build a very good professional rapport with whoever it is that you decide to work with to make sure that they have your best interest at heart.
Absolutely.
So let me ask you about that, because I hear that about that a lot. Like, we should always have a rapport with good relationship with your banker. What does that mean? Are we inviting you places? Are you coming to the birthday party, the barbecue? Is it just that we just send you a happy birthday card every now and then? What are we doing in this relationship? I'm just trying to figure this out.
So
That
one
can
thing
be
that we
definitely a
do,
part of the equation,
yes,
right?
it
We
could
do
definitely be.
housewarmings for our buyers. We go to their homes after the closing.
Yes,
So after the
yes,
transaction is completed, we're visiting their families, getting to meet those individuals after the transaction, right? There might be questions
Okay.
after that they might have in reference to just about escrows. That's what happens after the closing. So it might go beyond the transaction, right? But truly, during the transaction is where the value is added. And it's not based on you, the customer, what questions you might necessarily ask, but something as simple as if I don't ask a veteran if they're a veteran and put them into one type of loan instead of a VA loan, that can make a world of that can mean thousands of dollars upfront and hundreds of thousands of
Right.
dollars during the process of the loan just by not asking a question. I've spoken to individuals, they've had an entire consultation. Well, and you said no one ever asked you if you're a veteran. Well, there's money sitting on the table. So those type of things is where the professionals come into the equation.
absolutely.
Wow.
And just one
Okay.
thing I'd like to add about that would be a
Mhm.
comfort level that you get with that person when you initially start talking with them. If you're a buyer or whatever and you're comfortable, they make you feel comfortable that you can
Right.
ask questions, because you can talk to some professionals and the conversation's already over your head. So you get a little intimidated. And if they're not able
Right.
to bring you to a comfort level where you're really communicating, you feel like it's a
Right.
one-on-one. I can ask my question. No question's a stupid question. And you feel like you're getting
Right.
an answer. And very importantly, if you're working with that professional and you call them and they don't call you back within a reasonable time, everybody can be busy, but that's a key indicator that, hey, I called this person 3 days ago and they've not called me back yet, and your questioning was important to you. So making sure
Mhm.
that door to communication is open and that you're comfortable communicating with that person, and that's something that you establish on the front end.
Let me ask you this. If I'm looking for a professional and my professional is always available, is that a bad sign? Like, I'm asking because in some industries, if you go somewhere and your professional's always available, it might be a problem. But if they're a little busy, like you gotta wait a little bit, they might be a little better. If I'm just wondering, because I remember I've had conversations in preparation for this conversation, and people tend to have different perspectives at different ages. I had a homeboy of mine who actually happened to be a little bit more patient than someone who was in their 40s. They're looking for a different type of relationship from the professional than someone else is. But let me ask that. Um, am I going to create or need a different type of relationship with someone if I'm 45 years old, juxtaposed 25 years old, buying a first time home?
I think for that, it really goes back to some of the things that we've already spoke on, specifically where Chris was saying, make sure you ask the right questions. So when you set your expectations from the very beginning as the consumer, saying, this is what I would like to have happen during my transaction, it doesn't matter if you're dealing with a seasoned loan officer or you have someone that's brand new, and from the professional standpoint that is just getting in the business.
Mm.
If you as the consumer have stated, these are my expectations, I want a return phone call, I want to be able to get you when I call, then the expectation is set.
Right.
And so at that point, if that professional person that you're speaking with is not able to do it at this point, it should be some transparency shared and said, well, I can do this, or here's my schedule. So I think it's what you set from the very beginning. The questions that you put out from the very beginning should kind of get your relationship going in the direction you want as the consumer.
Great point, Yolanda.
Got you. Okay.
I would just like to piggyback on that. As you mentioned, we started off mentioning us as professionals. As a professional, you have to, right? If you truly want to manage your schedule, you have to give the right expectations, right? I tell anyone if I call them, say, I'm sorry I couldn't answer your call. It's funny, I always tell people, please, if you're answering all my calls, you're not doing anything else. Right. So I tell people all the time, I don't expect you to answer my call. Right. If you're only answering my calls, then your business, as you just mentioned a while ago, is probably not growing. Right. So the expectation is you might say, because if you're only dealing with one customer and your business is based on several customers, then the expectation might be that I will give you a call back before the day is end. That's why my voicemail says. So the expectation is set. I will give you a call back before the end of business. And then you can say what time that is. Right. So now you know that, hey, I need to check my voicemail at least 3-4 times a day to see who might have left a message. Right. But if you're answering every call, there's no way you can get anything accomplished.
I have went through the trenches, the understanding of dancing with darkness, to realizing that I had to be broken to be a light. Outside of the titles, outside of the responsibilities, what I owe God is everything. And so I speak from a solid foundation of knowing that I'm not my past circumstances, I'm not my past situations, I'm not my trauma, but I am who He's called me to be.
When it comes to home ownership, we mentioned a lot about expectations, and so I'm curious: are there expectations or myths about home ownership that you all kind of have to bust when you're talking to clients?
Anyone
Oh,
else?
that's always that's
Always.
That's always. She's like, you
everybody
Yes.
don't
knows
smile. That's
somebody
always.
who's gotten the house. You know, everyone knows someone who's been through a mortgage situation, and so a lot of people take their situation and their scenarios to heart and believe that that's the way their deal and transaction should go. And so from the
Okay.
very beginning, we want to go ahead and eliminate the questions of, well, my family member did this and this is the way it went with that, and oh, they got $50,000 to go towards closing costs. Can you do that? So we hear stories all the time where they're going off of someone else's scenario and trying to figure out if that can work for them as well. So there are always stories and myths that starts from the very beginning that we have to eliminate and get you back to reality of this is the way this transaction will go.
She's like, no.
Absolutely.
Come on back down to earth.
Another myth
Okay.
that happens very often, Derek, is right now someone who might have bought a home in 2010 and they're having a conversation with their family member. And they say, well, I want that same payment for the same home. And that home is now 3 times as much, right? So the payments are not going to be any place close, right?
Yes.
Or they see a house listed and the home does not include taxes and insurance or an HOAs. And they say, well, that's the payment I saw online, right? Why is this payment so much higher? So another myth that we see daily.
Absolutely. Absolutely.
Another
That
is
price
money
increase hurt my soul.
needed for down payment and closing cost. 10 years ago, you could get into a home with no down payment, barely any closing costs. We are not in that market today. A client of mine that purchased maybe 10, 15 years ago, they didn't have to put any money down. Seller paid all closing costs. They had very minimum that they had to put into the transaction. 10, 15 years forward today, they're wanting to purchase a house and they're shocked at the down payment that will be needed and the closing costs if the seller does not contribute. So the financial piece that the lender spoke of earlier is definitely paramount to the home buying process.
Wow. You know what? I believe it was Miss Yolanda that mentioned not just the 20%, but the extra savings already saved up. So when you hear people say, is it really the 20% down? But what else do I have to save for when it comes to this house? Because you both just brought that up. You will have brought that up in this conversation. What else do I have to save for when I get ready for this house besides maybe my 10 to 20% down payment?
Well, they may not have to have 20% down, but they've got to save up for their portion of the down payment. And even if they're getting down payment assistance, those programs require that they have some money. Because as it was stated a few minutes ago, you used to could get a house with no money down. Those days don't really exist now for loans. They also have to save for the things that they've got to spend. They've got to put down earnest money. They need money for their appraisal, for their home inspection. So that's money out of pocket costs that they're going to need to come up with. They're going to need money now. Underwriters and system is now calling for back to the days where buyers have to have reserves. Reserves are money that they've got to have access to, that they may not spend it they're not going to spend it in the transaction, but we need to see that they have those reserves in the event something happens, they have some fallback. So that's a part of money that they need to save for if they don't have a 401k or a pension plan or a retirement plan where they're accruing money, and those plans will allow them to do a hardship withdrawal. That's great. And we tell people you don't have to draw the money out, but you need to be able to show that you have it. So if you're working every day, that's a source of savings that's going to automatically be there that can help you when you get ready to go through this process. But yes, there are definitely some things they've got to have money up front for, or the transaction won't take on any legs. If they come to the table with no money, we're kind of at a standstill.
So if the money is still, so are we. That's what's going on. So let me ask you this, and I'm gonna ask you one of these questions I would see on some of the most hated Instagram pages I always see. Are there any secret costs to home ownership that any others that we should know about?
Secret costs.
Secret costs. Maybe costs that are not.
Yeah, they always do that. Like when
well, they gotta be real secrets. Well, everything, all the legitimate costs are disclosed because the rules of disclosure now are so important. So if it's not disclosed, then it must be a secret cost. And that means the lender doesn't know about it, the loan officer doesn't know about it, the realtor doesn't know about it. Nobody knows about it. It's such a secret. So secret costs, I would say no, because if it's not disclosed on the front end, either in the contract, some form in the contract, or it's going to be disclosed in the disclosure statements once the lender gets the deal. So there should not be any secret costs.
I think too, one thing that a lot of new consumers may not know about when they're starting this process, you're hearing on the internet and on the television ads that rates are at an all-time low. They are absolutely at an all-time low. We are truly in a different mortgage environment. However, all rates are not free rates. So yes, it is going to be disclosed, but some new consumers may not know what it means when we say discount points, or you're going to have to buy that rate down, or the rate is not going to come where there's not additional cost.
Because I'm already confused. I'm already confused. Smart for me. Wait a minute. Bring it back. What's your at an all-time low? What buy? What now? Go. I need all that. So in terms, I need you to tell me what those mean, because I'm lost.
Okay, so when we talk about a discount point, so typically, let's just say rates right now are roughly, I'm gonna give a number and it's not there today, but let's just say rates are at 3%. Okay, let's just say 3%. So that means if you come with a pretty good credit score, so really they want you to have a pretty decent credit score. You come in and your rate may be at about at 3% with no additional cost, which means that's considered what's called the market rate. Okay. Now, if you're looking at, well, I don't want 3% because I'm hearing rates are at 2.25%. So I want 2.25%. So that means in order for you to get that rate at that lower amount, then you're going to have to pay for it. It's not going to be free. So where you could have gotten 3% absolutely free, Now you want to go down to 2.25, you may pay about $5,000 for that. So that's another cost that could be incurred in the transaction. Yes, it will be disclosed. Yes, your lender, your professional person should be able to communicate this with you before you agree. But it is a cost
Okay.
that can be an additional cost that you may not have been aware of as a first-time home buyer.
Right.
Wow. Yeah, I didn't know any of that. So thank you so much. I appreciate it. Okay.
Absolutely.
Let me ask you this. Graduated college, went out, tried to do my thing, went to grad school. Do student loans affect me buying a house? Plus or negative? Is it a good or a bad thing to have student loans? If I pay them on time, if I miss one back, when I had to give up a kidney in order to make it through school, like how do student loans affect my home buying?
If I might take this one very profoundly, right? And and so I would also say this, that this is going back to the professional aspect, right? Because we spoke about something about your professional being knowledgeable about the industry.
Right.
Things changed significantly back in 2019 with student loans, right? What you used to be able to do totally changed, and it changes every year. Where the types of loans, their guideline changes. So going back to that professional, if the professional doesn't know the guidelines, then they'll tell you something that's wrong. Without calling out names, we work with several different investors, and one of the underwriters, and this is the person that makes the final decision on a loan, right, gave me a finding that said what I could not do with a student loan, right? And the reason that I knew what I could do is that every year I go to the underwriters class, right? There's a class that they have for underwriters every single year. And it was almost maybe 3 or 6 months after this new guidelines it came out already. And the underwriter told me, no, it couldn't be done. So I was fortunate enough to have that documentation to send it to the underwriter to say, this is what could be done with student loans. So student loans have different guidelines, right? I'm not going to go into it all but for each specific type of loan, for an FHA loan, for a USDA loan, for a conventional loan, for a VA loan, they all have specific guidelines. And if you as the loan officer does not know the guidelines, you can tell someone that a loan cannot be done. We closed over $1 million worth of loans just last year, right, with individuals who were told that they could not do a loan because of their student loan status. Because of us knowing what can and cannot be done, we're able to save that loan for that home buyer. So it can have a profound impact. Again, each loan so yes, can someone have student loans of $100,000 and still purchase a home? Yes, depending on what they call, right, the monthly payment. So just using one example, for a conventional loan, they can do what they call an income-based payment plan. So someone can own $100,000 of a student loan and have a payment of $1, and they'll count that if it's on an income-based repayment plan. If it's not, that person might have an income that's so high that they cannot get an income-based payment plan, and so they have to use an amortized payment. That means that it's just like a car over a specific period of time. They'll use that payment. If they're not willing to do that, then they'll use 1% of the outstanding balance. But you never want to take the worst case, which is the 1% amount, because that can take someone into getting turned down when they shouldn't be. So that's just one example of how a student loan can turn a loan down, and someone can come to you and say, well, John already told me that the loan is dead, so why should I talk to you? Well, just because maybe John's information is not 100% correct.
Wow.
Absolutely.
Wow. So I get turned down 4 places, 5, 6 places. Do I just keep looking, or do I? Because at a certain point, I'm always wondering if I'm getting turned down from all these places. I guess my question is, what drove him to or her to you? If they had already been, or these people to you, if they had already been turned down. Like when you're trying to buy a home or create wealth in that way, when do you know to just stop? This goes back again, I think, to just having a professional being able to tell you, like Ms. Yolanda said, and like Ms. Sharon said, being able to say, and Ms. Rakia said, and being able to say, okay, this is you. You need to fix this. as a
Mhm.
professional, I can do this for you, but you need to fix this.
Mhm.
Absolutely. And it depends upon why they are getting turned down. If you're paying your
Right.
bills late, if you have 30-day late payments on your credit report, why are you doing that and trying to purchase a house? So, you have a big piece in this to make sure that you're doing your due diligence, that during this entire process and beyond, that you're making sure you're making your payments on time, that you are not having your credit pulled multiple times at multiple places, because the inquiries do affect your credit score, making sure that you're not just haphazardly opening accounts that are unnecessary, that could potentially drag your score down. So all of those, have a factor into why, if you're being turned down by 4 or 5 different places, is it because of your credit? Is it because of your income? Have you had an income gap where you haven't been employed for 6 or more months? Do you just not have enough in your assets? Are the reserves short? Why is it that you're being turned down? If it pertains to a student loan where there could be an income-based payment plan brought into the equation that would allow you to qualify, whereas the other lenders did not consider that, then potentially, as Mr. Stewart stated, okay, now we're in the playing field where you could potentially be approved. And I've seen that before. Chris has seen it before. Yolanda, Sharon, we've seen it before, where if you just make an adjustment, maybe where another lender did not suggest those items, it could put you back into a position of being able to be pre-qualified. But you have to do your due diligence.
Absolutely.
Right.
And
So,
that's where it comes back
wow,
to
that's
the
a lot.
question that they're asking.
Mhm.
That's where the questions
Say
that
that
are
again,
asked.
Mr. Stewart.
That's why the questions that are asked to the potential homeowner becomes important, right? What is this payment? Is it an income-based payment? Is it an amortized payment, right? It can, as Rakia just said a while ago, it can be something as simple as, right, a loan goes to a builder. You were the initial person that had gotten the loan approved already. The builder reviews it and say, well, this loan is turned down. The loan, though, might just require you to take off one of the borrowers, right? So it might be something as simple as that. A husband and wife came to you and they said, we want to purchase a home. But you as the professional know that maybe together they're not the strongest potential customer, right? It might be one
Right.
individual. So again, this is where the insight or the guidance of the professional to say, well, I know you both would like to be on this loan, but this loan gets approved with just the wife or just the husband, right? You can still be on title, but you
Right.
might not be bringing the strongest loan into the equation. But that's where that professional gives you the guidance and insight. Now you still get to make the decision. Well, we don't want the home now, or it's okay, we can both be on title. But unless you dive really deep into what they're bringing to you, then oftentimes that might be missed.
Right.
Absolutely. Very good points.
Wow.
Because everybody's
Wow.
situation
Okay.
is different.
Right. Nothing
Absolutely.
is routine. Right. Nothing is
Right.
routine.
So let me ask you this. I've heard you all bring up how we as the consumers may have some sort of, we have our part. We have our part to play. When it comes to our credit score and the representation of it, I've often been told that you should look at your credit like it displays your relationship to money, your relationship with your creditors, with your bills, so on and so forth. When it comes to buying a home, is there an optimal score that I'm looking for that just says, hey, yo, if you got this score, man, you golden. If you got this one, you may want to start with something else first. Go meet with a financial planner. Like what is that optimal score? Is there such thing, or like Rakia just said, is it very much just individually based? Financial services per person.
So I think one of the things we look at is, yes, we do automatically look at the score when we're analyzing credit, but that does not mean that we're in a win or a lose situation. We typically say, credit score is a 620 average, and we can move on transactions in that manner. However, we are able to do scores lower than that. But what we also look at when we're looking at the credit score, we're looking at the trade line, we're looking at the credit liability, we're looking at the pay history, we're looking at various other things on the credit report besides just the credit score. Because we can see
Okay.
someone with a 620 and say, okay, looks like you may be doable. We can move forward with your transaction. Same thing with someone with a 700 credit score, but could just recently file bankruptcy and the score has started to bounce back, but you have not had the bankruptcy seasoning time frame required to come into a transaction just yet. But
Hold
your
on,
score
hold
started
on.
to bounce back.
Bankruptcy seasoning time frame. Wait a minute. Going back. You too smart. Go back. Bankruptcy
That means she's
seasoning time frame
cooking the
is
bankruptcy,
what?
Derek. Seasoning cooking, that she's cooking the bankruptcy. No, I'm joking.
So one thing we look at, so let's just talk about bankruptcies. Typically, when you file
Okay.
bankruptcy, whether it is a Chapter 7 where you're just eliminating all your debt and have just agreed that you're not going to pay any of your old obligations off, you're going to walk away. In a Chapter 7,
Okay.
most cases, you're looking at a 2-year time frame in order to pretty much say, okay, at this point, I'm in a position where I'm ready for home ownership. And this is just typically with
Okay.
traditional, mortgage lending. So let's just say you file bankruptcy, and maybe in 6 months, your credit score has already started to bounce back. So where you may have a higher credit score, you still may not be quite ready for that mortgage loan just yet, just because the time have not elapsed
Okay.
in order for you to be able to, get qualified based off of the requirements for that loan product. So we say,
Okay.
yes, we do look at the credit score, and that definitely is a very important factor. However, that's not the only factor. We don't want you to come in thinking, oh, with a 500 credit score, that this transaction will be easy and we can still do it. You do have to have a minimum score, but there are other factors in it as well.
Okay. So
Absolutely.
the seasoning process is just a time frame that says, since you've declared bankruptcy, this is what you've done since then. And after so long, we're not going to look at that bankruptcy as a negative.
Correct.
Correct. Because you're showing signs of recovery. And that's what
Yes,
we're looking for. Once the bankruptcy's been filed, a person needs to recover. So that during that seasoning period, they should be recovering from that as far as their credit is concerned. And we'll be able to tell that on the credit report because we'll either see some new accounts being opened
Mhm.
and how they're using
Right.
those accounts. They're establishing some good payment history again. So, that's the seasoning process tells us a lot about that client.
Got you. So this isn't like a microwave seasoning. This is a crock pot seasoning. Like you put some spices in that thing and let it sit for a while, and then
Yes.
your score be looking all juicy in the morning. All right, cool. So ladies and gentlemen, we are running up on the end of our time together. Look, but I want to give y'all just a minute. It was quick, right? Didn't this go fast?
Right.
So
Yes.
It did. It
see,
did.
this is good stuff. This is why y'all have to come back so I can harass you some more. So
Absolutely.
for real, because I promise you I have a whole new set of questions. So let me ask just a 1 minute from each of you. Is there any tidbits or maybe some jewels you want to drop real quick before we wrap up? Let's start with Rukia.
Absolutely. Thank you. I just want to say the process can be intimidating to purchase a home, but don't let the fear control you. As you're doing your part diligence, making sure you're paying stuff on time, your credit is intact, that you're making sure you're saving money, that you're connecting with the right individuals that can steer you in the right direction, it can be a win-win situation. Homeownership right at an all-time high. Millennials are wanting to purchase homes. This is an absolute amazing time to buy with the interest rates below. So let the process intimidate you. Make sure you're connecting with the right individuals like us, be able to help you navigate the transaction, to give you the guidance and the insight that you need in order to put you in that position to finally be able to become a homeowner, to be able to build wealth for your family, and be able to be in a financial situation that's advantageous for you, for your family, and generations to come.
Gotcha. Miss Yolanda.
Yes, so for one of the key things, I just think education is key. Just like we've been discussing this whole segment, that education is most important. So know what you're getting into. Know exactly what you're looking for when you start this process. Continue to do your mortgage checkups. Stay in tune with your financial wealth. Know where you are. I think that's the very, basic thing that you can start with that doesn't cause for too much of, knowing the process, but know where you are. And so more importantly, just check your credit. Make sure you're keeping in tune with what you're doing in regards to paying your bills. Make sure you are staying employed. Those things are factors, and trying to be disciplined with savings. If you know homeownership is something you want to do in the next 12 to 24 months, then you need to become disciplined with your budget. So pay attention to what you spend. Keep an eye on that. Those are the souls to the heart that we monitor. We look at credit, we look at your bank statements. So make sure you're looking at that as well and know what you're coming in the door to us with. So then that way you know the strength in your buying power.
Absolutely.
Miss Yolanda. I'm sorry, Miss Sharon. I'm looking at Miss Sharon calling her Miss Yolanda. Okay.
That's okay. They've given you such a wealth of everything that's on the table. But to add to that, I would say individuals need to be conscientious about their information, knowing your employment history, having that kind of information handy, your documentation, pay stubs, bank statements, all the things that we're going to ask you for. You need to know where those things are, and you don't need W-2s. You don't need to say, well, I got to call my tax person to see if they can find my W-2s, because I think they're in a box. But if you, as Yolanda said, if you're thinking about going through the process, preparation for yourself, we can't do that as lenders. When we ask for documentation, we need that documentation. And if you don't have a clue where it is, and you give it to us and it's all upside down, the ends are cut off and all those kind of things, the industry today won't accept that bad documentation. And one other thing, cell phones documentation, submitting documentation over the cell phone is a no-no. And I know we all do it because we got so many apps and that kind of thing, but people need to actually be able to have access to, they need to have access to where they can submit their documentation. They can scan or they can fax properly. So that can hold the process up. It can cause you to get behind in your contract period, run out of your due diligence period because your lender is waiting on documentation that you have, but you have a problem getting it to them. So being responsive on that buyer side is key, being able to be responsive.
Yes.
Sir?
Thank you very much for the opportunity to speak on home ownership. It was truly a pleasure. I would definitely say that I'm going to leave you with 3 letters that for someone who is a first-time home buyer or is going back into purchasing already, that we use every customer we speak with in an initial consultation. And we use it a little in a funny way. We said, listen, the 3 things that you want to remember, if it's easy to remember, is the letter CIA. Nothing to do with our federal government, but it's credit, income, and assets, right? That's all the loan is composed of. And for us as professionals, I think the more we can simplify the process for the homeowner, as Rakia said, to let it not be so daunting, then that individual can become a lot better prepared for the process. So remember those 3 letters, CIA. Find a professional that, as Yolanda mentioned as well, that's truly going to be interested in your well-being. What is it that you're trying to accomplish? Asking you the right questions so that the right questions allow them to empower you to make the best decision for yourself, and they're not trying to make the decision for you. So again, thanks for the opportunity with these amazing professionals today. And it's been a pleasure.
Y'all have blessed me. So real quick, y'all, tell us where we can find you so I can come and beg you to save me. We can find you. Our viewers can find you. Where can we find y'all at? Real quick.
For me,
Citizens Trust Bank, we're at. Go ahead.
Sorry, I'm sorry. This is my fault. Sorry, Miss Sharon, you go first.
Thank you. For Citizens Trust Bank, you can connect with us very easy. www.ctbconnect.com.
And we're also on Facebook.
So is that for
Instagram,
you and Miss Yolanda?
Yes, Facebook.
Oh, you everywhere, Miss Yolanda. Okay.
Mm-hmm. Yes.
Facebook, Instagram, and where else?
And Twitter as well.
Yolanda Munford. That's where we're gonna come find you. Okay, you everywhere. All right. Rakia, what about you?
For me, it is online, www.soldbyrakia.com. That's SOLDBYRIKKIA.com.
My good man, you got the last word.
Thank you again. It's www.stoneoak mtg.com. And you can find us
Goodness
there.
gracious.
We're always here for, to help that individual who needs some guidance and insight.
Look, y'all have blessed me today. Thank you so much. Really though, there's just so much knowledge here, and I really do appreciate your expertise and your time. So thank you for that. Ladies and gentlemen, this has been your episode of Financial Freedom with all this wisdom and goodness and a little bit of my weirdness. So thank you for joining us tonight, and thank you for tuning in. As always, please be safe out there and be